Hello, folks. Welcome to Tuesday, 420. Yeah, Elon Musk's day, I guess. Remember when he was calling Tesla 420 on 420? Well, it's the big smokers day. Cannabis talk all day on probably CNBC. I don't know. But anyway, let's get on with the economic data, see how that's impacting the markets with some of my market analysis, and then talk about option strategies that I'm implementing into my portfolio based on those assumptions I come up with in my market analysis. And for you folks, what I've done is I've streamlined your process to find the optimal option strategy for any given assumption by looking at the pricing. That determines whether or not we're either buying a strategy or selling, collecting a credit for a strategy. That's how we narrow this down and further find the optimal option strategy for you guys. So we've really streamlined that process. Please check out those webinars and smash that like button if you take anything away from it. All right, anyway. On with the economic data. Really nothing to see here, folks, here and or across the pond at this point in time. It's really a pretty quiet day, really news driven for the most part. So let's get on with the overall markets and see what's going on there and see how we can try and take advantage of some of these moves going on, because we are in the mix of earnings season. We're seeing better than expected earnings as we were looking for with the new round of stimulus. I would expect people to get out there and spend that money. As a matter of fact, we saw Harley Davidson come out with 30% more year over year sales during this pandemic, as people are going out there and maybe spending some of that extra money to go out and buy a Harley. We've talked about this, getting out and this cabin fever. So that's part of that as well. All of that being said, restaurants are having a lot of trouble trying to get people to come into work. As a matter of fact, one company said 2,500 open positions for them, and that has to do with these unemployment benefits. When they got that extra, bonus in the unemployment claims that goes until September, people are probably going to want to sit at home and collect unemployment rather than go and work a full day for less money, folks. So it's going to be very difficult to get these people out of the house and looking for a job, as far as I'm concerned. All right, so crude oil coming off by about $1.50. The markets feel like, yesterday I said it was feeling a little bit heavy. Today it seems like, even though we're getting these better than expected earnings, forward guidance being better, we're seeing some correction here in the equities, and that very well could be in part due to the fact that the participants in the market right now probably are struggling to find value, as all of this has kind of been priced in already. So they don't want to get caught on the wrong side of buying in at these high levels, and more so waiting for these little bit of incremental pullbacks that I've been talking about that we're going to probably see for the rest of 2021. We're already starting to see that, where people are a little bit nervous about the pricing based on forward guidance. And these forward guidances are really based on spending trends that the consumer is going through right now. Now, if you think about that, they've just gotten all of these different bonuses, whether it is from the unemployment benefit bonus or the other $1,400 bonus per person. Okay, all of that money is being spent in the economy right now. So these companies are seeing this huge demand for their products, but is that going to be able to be sustainable over the long period? Probably not, especially with 17 million people unemployed. Remember, before the pandemic started, people on unemployment benefits, there was only about 2-3 million. We're at 15 million people right now. So that is a lot. And when you're giving them more money than what they may have made before, there's really a difficult incentive to get them back. And we're seeing that start to play out. All right, bonds up a 0.5 point on the day. Gold futures up $5 on the day, back above this trend channel or trend line and the 50-day simple moving average. We've talked about this many times. It looks like we are going to look to go back into that 1800s. Well, not at this point. We really have to get above this line in the sand here, which lines up quite nicely with 1775. We're right there now, but we need a push to the upside to get a settlement above. It might be a little bit higher than that, 1780, let's call it. So a little bit more of a push to the upside to get above that line there, and that would even further give the bulls some breathing room there. All right, Bitcoin It's off a little bit today, but we did draw this trend line. It's not a very good one, folks. It's not really touched. I tried to slide it up just a little bit and play around with it. I'll probably do that a little bit later. As we can see, though, it did settle above that 50-day simple moving average here and that little line in the sand that I drew. Even if I had it in the right place, just slightly higher there, it would have settled above that line there. Right now, we are toggling that line there, but we're setting up with two dojis here. These two dojis setting up is forming a little bit of a bottom there as the way I see it. Now, we don't have a confirmation on either one of these candles, but to me, this is setting up for a little bit of a rounding off here in Bitcoin. Now, we had higher highs, higher lows, which is indicative of a bullish market, and above that 200-day or 50-day simple moving average. That is indicative of a bullish market. Now we've we've broken that low. That could be in a corrective phase. We're going to have to keep our eyes out for that at this point. But right now, this little bottom has been broken. Now, some people on charting would say that is, let me just draw it up here for you folks so we can see it a little bit easier. I'll try and draw it nice. So we have a high here, and then a low, and then a higher high, a higher low, a higher high, a higher low. This one is a higher high here, and then a higher low. Okay, but what is going on right there? Well, that isn't really a higher high or a higher low. So what most people would say is we've got the market doing this. Okay, so it would kind of move over that line in the sand there. Okay, so that is probably the real line to break that lower low. All right, so we are still in a bullish pattern there for Bitcoin, for you folks that are into the crypto there. All right, this finally starting to spike here. Are we going to go back into those 20s? Remember, I used to say the 20s are the new teens earlier this year. Well, we're probably starting to see that as volatility is creeping back into this market because it's starting to roll over. Yesterday, we got a confirmation of a top here in the NASDAQ because we got that little top pattern confirmation. Today, continuing on to the downside. Similar setup in the candles for the Dow Jones Industrial Average. Confirmation today of that topping pattern. Again, E-mini S&Ps. They all look the same, folks. It is looking like we are going into a little bit of a corrective phase here. So I hope you took that opportunity. Something we used to say on the floor is get them while you can, not while you need them. And when I was talking before about looking to put on some protection in that portfolio, that was the time to do it. Now it's starting to get a little bit frothy, and you might have missed those opportunities. I don't think it's completely out of the realm of possibility to get involved in something as of right now, but opportunities are made when we start to see those setups happening. All right, let's talk about the trades that I've done. IBM came out with better than expected earnings, forward guidance looking good. Finally, people are starting to like their cloud services, I guess, because that's what they talked about, and it did not come back to haunt them this time. So I did have to get out. I got out of my long put spreads in IBM that I had in my IRA, my trading account. I still have on the long position in my trading account. But I do have a working order to get out of that. But with that said, in IBM, you guys have noted I lowered my overall cost basis in this trade against a long position. But then on a swing type trade, when we got this setup here, I got into a long put spread. And that long put spread, I ended up getting out of that trade today for a loss because obviously you have a long put spread and it goes to the upside. It's a loss. So I had the June and I was long the 130 puts, short the 125 puts in order to define that risk. That I did for $1.56 debit. So about a third the width of the strikes there. That's what we're looking for on a long put spread. That's just slightly out of the money there. And that's how I set that trade up. We got a little bit of a move to the downside during the life of that contract, but we also saw the volatility come out a little bit during that as well. Anyway, all that being said, directionality completely wrong here on this pop today, and I got out for 92 cents. So a slight loss of about 60 some odd cents there on this IBM trade. And I covered it in both my IRA and in my trading account. I'm still long IBM though in my trading account. I'm trying to cover that trade for $140.01. That's the price that I've got working as of right now anyway. If we get up there, I'll start to look to sell some puts and get this contract rotating back and forth in my portfolio again. And then, excuse me, in Gumbel, folks, I finally covered this trade yesterday. We got a little bit of a pop late in the day and came up and got my short, got out of my long Gumbel, sorry. Excuse me. So with Gumbel, if you guys remember, I went out and I had bought these originally for about $4 and I think it was 88 cents. That was when we were near the lows. We've written this out up to the 24, started coming back, and during this little area here, we can see that there's a couple of points where we saw that there was some bottoming patterns, and we even have one today again, but we keep breaking those. I'm going to wait till we get a confirmation here of a bottom before I get back involved in Gumbel. But if you guys remember, originally I had gotten involved in this trade, like I said, for $4.49. I added to some of that 2 days ago by buying them at $11.65. Market completely continued to sell off, obviously. Yesterday, I got out of those for $10.60. So a little bit of loss on the ones that I added in. Made money on obviously the ones I bought for around $4. And with all that said, I'm out. I'm not out of the woods, though. I'm still going to keep an eye on this. We get a confirmation to the upside. I'm still a believer in Gumbel. I'm just going to wait for better pricing on this. And with that said, I did lower my overall cost basis on that trade by about 40 cents. So you have to take that into account as well. All right, that's all I've done so far today. Keeping an eye on a couple of other things. I am keeping an eye on my pen because it's the one I didn't cover, and I thought it was going to actually start making a comeback, but it's continuing to slide here and got below its 123 Fibonacci. To me, it's just this whole gambling sector, did take a nice move to the upside. We're seeing a bit of a correction here lately with the reopening going on and states opening up with online gaming for betting on sports books, and that's exactly what Penn is involved in. So I'm going to hold on to this trade and stay with it, as I've lowered my overall cost basis on it to 0, and so I'm going to write it out for just a little bit longer, folks. We're going to keep this one in the portfolio. All right, so that's all I got for you guys, other than if you can't take that, take it easy. Oh, and by the way, if you take anything away, smash that like button and check out our disclaimer. Bye for now.